Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Friday. It is November the 11th. It is Veterans Day in the United States and perhaps maybe, I don't know, maybe somewhere else as well. So thanks to all the veterans who have served us and enjoy your Friday. It's almost the weekend. So what I want to do in this video is just do a quick recap on Occidental Petroleum, but then I want to dive a little bit deeper into Petrobras and talk about the sort of story around Petrobras as opposed to the fundamentals or the valuation of the stock. So we're going to explore a little bit about Petrobras sort of from a few different angles. But to start off with, so as you guys know, Occidental reported this past week. I do have the 10Q on my laptop for weekend reading, but here's the highlights reel. So from a revenue point of view, Oxy came in at 9.5 billion. The estimate was 9.41, so a comfortable beat on revenue. On earnings per share, Oxy came in at 244. The analysts estimated 249. So it was like a 5-cent miss on a per share basis. This is immaterial. It's of no consequence at all. Oxy will just keep chugging along. And as I said before in a previous video, Oxy is kind of now a little bit boring. You know, it's kind of me too. What else is happening? So, by the way, I'm just looking at my little scribbled note here on the back of the envelope. The price that they managed to achieve through the quarter for the third quarter on a barrel of oil equivalent basis was 94.89. The analyst had estimated 94.16. That's one of the reasons why the revenue came in slightly higher than the estimate. They closed close to about $3 billion in stock buybacks. That's good for long Oxy share owners. And the debt now is less than $19 billion. So getting close to investment grade. So anyway, that's kind of the snapshot of Oxy. I might do a video on Oxy, but some of the people in our community have asked me to do some other interesting analysis on stocks that I'm not necessarily familiar with. So maybe I'll look at those first. But anyway, this is the sort of emerging market super major energy stock. And as you know, I'm long Petrobras, and I know many of you are as well. So I thought, why don't we take a little bit of time and just take a look at Petrobras and view the stock in a little bit more detail. So earlier this month, Petrobras said it expected its production to average approximately 2.6 million barrels per day. 2.6 million barrels per day is more than double the production of Occidental Petroleum. So it gives you a sort of a quick snapshot indication of the size of the company. The company production averaged 2.64 million barrels per day of oil equivalent in the third quarter with an average Brent price of just over $100. That's pretty good. It's one of the reasons why they're so flush with cash. Financially, Petrobras reported adjusted recurring EBITDA, so earnings before interest, taxes, depreciation, and amortization of $17.6 billion for the third quarter, which is the second highest adjusted recurring EBITDA it has recorded in its history. And it also recorded net income of $8.8 billion and free cash flow of over $10 billion and controlled gross debt of $54.3 billion. The debt arguably is a little high, but it's okay for a super major this size. The company's average return on capital employed was 15% during the quarter. Those are really, really good numbers. If we check in with our friends at TipRanks, they have Petrobras at a 7. 10 is good, 1 is bad. So this is sort of just, they say neutral, but it's just right of center, so slightly positive. But if you look at the sort of market narrative in general, the analysts are saying hold, you know, an analyst, whether you want to trust their opinion or not, that's debatable and you should do your own due diligence. But I'm kind of in that same box with the analysts right now. And by the way, sort of as I get to the close of this presentation, I'm going to show you potential ways that you could trade Petrobras if you do want to make any trades at all. We'll talk a little bit about that. And I'm also going to go back in history a little bit to see what happened previously when Lula was president of Brazil. Anyway, this is still staying with tip ranks. Pretty much everything is positive except that the hedge funds have reduced their activity, but decrease of 10 million, 10.7 million shares is not really a lot. The news sentiment kind of neutral, 50-50. Everything else is pretty much positive. Return on equity down at the bottom, almost 50%. The technicals are positive. Everything's positive. So what's the negative? The negative is obviously the recent election. So let's take a look at this, just sort of a quick snapshot on the fundamentals. This stock has been hammered over the last 5 days. I don't care too much about the last 5 days. Over the last 30 days for sure, because it included the runoff election that was held on October 31st. And over the last 60 days for sure, because that includes the original or first election where Lula and Bolsonaro finished so close to one another that there had to be a runoff election. If we look at the price performance of the stock, and I'm going to come back to a historical chart that goes back more than 20 years in just a minute when I talk about the presidents, I'll show you that one. But if we look at the sort of overall performance of the stock, you can see in 2022, we're still up 5.26%. And the year's high, though, was $16.32, and the year's low, only $10.72. So what's going on here? So let's take a look here at the Analyst. I know the screen looks a little bit busy, probably looks like a Christmas tree because it's almost December for people who celebrate Christmas. New constructs has it at a 1. That's a buy. The research team says hold. The street says buy. CFRA is kind of neutral. Forward equity research is kind of neutral. These are all new and post-election. That's why I added these green arrows here on the right. November 10, November 10, November 7, November 5, November 5. In other words, this is their updated ratings on the stock after Lula won the election. So you have a sort of a mixed bag here of buy, hold, hold, but no one is necessarily saying sell. If we look at this fancy chart over here, what you have, and this is for the technical guys, you see this red line here? This creates a classic head and shoulder pattern. And what we have here on Petrobras, again, just for the technical guys, and by the way, I'm not a chartist, but I do look at these things because they are interesting to me. You have a head and shoulders top, which was recorded on 31st October. That was the day of the election. It's bearish. It's a downward trend. You can see the close at the time was near $13, and now we're at about $11, regardless of what happens today. And the opportunity type is bearish, and the event duration approximately 20 days. So if you're a technical guy and you follow the charts and reading the tea leaves, it will tell you that you're in a bearish trend for probably the rest of November, and then we'll see some daylight at the end of that. Of course, these things are impossible to predict, so you just need to decide for yourself whether you are viewing Petrobras as a value trap or a value investment, as a dividend trap or dividend investment. Those are things that you need to sort of examine and explore for yourself. The analyst recommendations, as I mentioned, there's only one buy. There are 3 outperforms and 9 holds. There's not a single underperformance sell. Now, you might say these are more analysts because we have 13 analysts here. And from tip ranks, we only have a few. I think it's 5 or maybe 6 on the sell side, and here I got 13. The reason for this is because this information comes from my international investment account through HSBC and not my usual account that I share with you, which is TD Ameritrade. So now let's talk a little bit here about just how you could possibly trade this stock. Now, right here at the top, you can see this particular account. So I'm showing you one of my accounts. This particular account has a small position in Occidental Petroleum with a gain of around $4,000. And then we have Petrobras. So these are a whole variety of different trades, but there are only actually 3 trades that I initiated. One was a buy for $1,200 at around, 1,200 shares for around $10 per share. And then I added 780 and 900 shares respectively at $13.83 and $14.14 at $14.14. So you can see I'm in the money on the largest trade that I made at the end of last year. So this was November 2021. And then in January and February, I added a little bit more. I expected Petrobras to kind of take off. I also warned several times that there's a pending election coming up in October, and we don't know if Bolsonaro is going to win. I initially suggested that it might be positive for the stock if Bolsonaro were to win. Today, I'm less confident of that statement, and we need to have a look back, if history is any indicator, to see what Lula did when he was president. Now, the reason why I'm showing you this particular snapshot in the manner that I'm displaying this to you is because in this account, I have Occidental, just a few shares, 500 shares, with a gain of around 4,000. And here I have two tranches of Petrobras with a loss of around 5 grand. So let's call it sort of a wash if I offset one with the other. And then at the bottom, you can see, and as I've shared with you on several recent videos, I've been moving money into XLE. XLE is my parking place for a period of very, very great market volatility. And XLE is 20% Exxon, 20% Chevron, and then about another 15 to 20% really, really good, solid performers in the United States like ConocoPhillips, EOG Resources, Devon Energy, Occidental, etc. So XLE is a fantastic parking place. And as you can see in this particular account, XLE has performed really well. So what I could do here as a trade, if I wanted to trade, and by the way, I'm not going to trade because I'm not going to sell any Petrobras, but let's assume I did. Then what I would do is I'd say, okay, here I have a tranche of approximately 1,600, 1,700 shares. And what I'm going to do is I'm going to sell 1,000 of my most expensive shares. So I'm not going first in, first out, or first in, last out, or last in, first out, or any of those. I'm actually going to say, I'm going to place an order and sell 1,000 of my most expensive shares, which would be $14.14. Now, there are a couple of smaller tranches here, even though the numbers are quite large or measurable or similar. $14.17, $14.17. Those are dividend reinvestments. So if I say sell my most expensive 1,000 shares first, the 240 or so that were purchased for $14.17 would go first, and then I would dip into this 900 to sell the rest. So I'm going to sell about sort of 200 of these and 700 of those. And the reason why I would do that really is to say I'm going to do some tax harvesting here. So what I'm going to do is I'm going to sell some of this, eat the loss, let's say for about $4,000, whatever the math is. In other words, however many shares those are. And then I'm going to sell Occidental, which is a gain of around $4,000. Or otherwise, what I will do is I'll sell a little bit of XLE. So I'll trim a little bit of XLE and take some profit, about $4,000 on XLE. So if I take profit on Occidental Petroleum or XLE, I can offset by trimming some of my Petrobras at a loss, which effectively ends up as a wash, which means I don't have to pay any tax on the gains that I've realized on my XLE or Occidental. I hope that makes sense, right? So in other words, what I'm saying is I'll take profit on Occidental Petroleum or XLE, or even both, and then I'll sell my most expensive shares of Petrobras. What it does for me is two things. Firstly, the tax harvesting, which I just explained, because I'm taking a taxable gain, but at the same time, I'm taking a taxable loss. So one offsets the other. But what that would also do for me is it would take my Petrobras cost basis, which is currently around $12 in this particular account. And because I sold my most expensive shares, my cost basis might drop to around $10 or $10.50, which means my entire position is actually in the money. Now, these are things that you can do if you want to trade it at all. I have told you already, and I'm going to say it again, I'm actually not selling Petrobras right now. I'm just holding. I'm comfortable holding. I don't need this cash that's in this particular account. I don't need the cash in this particular position. I don't need to liquidate it. I'm actually comfortable holding Petrobras for another 3 or 5 years if I had to. I probably might not do that, but I can if I need to. So I don't need to make this trade. And because I don't need to make the trade and I don't need the money, I'm not going to make the trade. And I'm going to think for now that there's a possibility that Petrobras will recover some once all the noise, the political noise kind of subsides a little. Maybe once Lula puts his own CEO in charge of Petrobras, and then that will cause maybe another pullback or a dip in the stock price before it goes up again. The company's fundamentals are sound. Their production is huge. The prices are great. The free cash flow is phenomenal. And of course, the dividends are great too. But I'm going to come back to that one in just a second. This is Morningstar. So Morningstar's latest report, which is dated November the 7th, so it's current, gives Petrobras a 4-star rating. Fair value estimate on the stock of $16.40, which is reasonable. and very high uncertainty because we're still in that kind of pocket where there's too much stuff going on from a macro point of view to feel comfortable to say, guys, this is a buy. So I don't want to do that. I don't want to say this is a buy. I'm saying if you don't have a position in Petrobras, you might be very, very cautious if you want to initiate a new position in Petrobras right now. If you do have a position in Petrobras, you can either hold it, or otherwise you can trim, like I just described on the previous screen. Or otherwise, if you're nervous because of the volatility and the price decline, and hopefully you're in the money, because rule number one is don't make a loss, and rule number two is don't forget rule number one, you could sell and say, I'm just getting out of Petrobras. So for me, right now, it's a hold. I do understand that there are some people who are adding and just getting in. Hey, you know what? All strengths to you and good luck to you. You need to just do your due diligence and then decide what's right for you. Over here on the right-hand side, you can see that Petrobras is now grossly undervalued, trading at around $11, regardless of what happens today. So one more slide here, just talking about Morningside, and then I'm going to show you the presidential sort of historical lesson, and then I'll wrap it up. Our fair value, I'm talking about Morningstar here, and moat rating are unchanged, leaving shares trading at about a 20% discount. If you are prepared to take that risk in order to get the 20% gain over time, not tomorrow, not today, then you can look at Petrobras a little differently. Shares continue to trade at a discounted price despite the large payouts and strong earnings due largely to political risk in our view. In my view, personally, the political risk is actually right now the only risk to Petrobras. So if that can kind of subside and like just gently kind of fade away, Petrobras might be just okay. Arguably, this risk has increased with the recent victory of Lula in the recent presidential election. I'm coming back to that one in just a second because I want to give you the history lesson as well. Petrobras announced a dividend of $1.31 American dollar per ADR at the current exchange rates, which will be paid in 2 installments in December and January. So far this year, they've returned approximately $4.60 per ADR to investors. Here, I'm looking at a 20-year history, and the reason why I went back 20 years is because I wanted to include the full term of President Lula previously. And you can see that President Lula was president for a long time, while Rousseff, Temer, and Bolsonaro were only presidents for a relatively shorter period of time. Already we see articles like this one 22 hours ago on Seeking Alpha, which remember Seeking Alpha is just a site where bloggers like myself write stuff in order to earn pennies per click. Petrobras has been showering its shareholders with dividends, but many investors fear that the Lula fear, right? Some of the largest returns that I've achieved in my career has been as a result of other people's fears. This is Lula's history. Since 2003 to 2013, when he was president, this was the performance of Petrobras and the regular dividend payments, D, of Petrobras until the financial collapse of 2009, 2010, after which Petrobras spiked once more, while Lula was still president, with regular, continuous dividends paid to investors, which continued for just a year and a half or so, while there was a new president, Rousseff, and then there were just 2 dividends respectively, one in 2013 and 2014, and then no dividends for the remainder of Rousseff's tenure, and then Temer, who followed Rousseff, and then right at the end of Temer's term, I'm not sure if I'm saying his name correctly, dividends spiked again. Petrobras started paying dividends again, and during Bolsonaro's reign, Petrobras was relatively flat. Obviously, we had a dip here in 2020 because of the pandemic, but Petrobras was relatively flat, but we did receive regular dividends. Now, this is not a political comparison. This is just a history lesson. Under Bolsonaro, Petrobras' performance as a stock was relatively flat, and we received regular dividends. Under Lula's reign previously, Petrobras spiked, went off the charts. It went up all the way to $60 per share, and we received regular dividends throughout Lula's entire reign as president the first time around. So is history a lesson for us to look back and say, what it might look like as an indicator going forward, or don't we know, right? So it's very difficult to make predictions because there's just so much volatility, there's so much political interference, there's so much stuff going on, right? But what I wanted to do was just give you a fair, balanced, reasonable, rational, logical overview of Petrobras. If you like it, you probably like it for its fundamentals. You probably like it for its dividends. You might like it for its free cash flow. You might like it because it's an emerging market stock that is relatively inexpensive. And if you dislike it, there's a really good chance that you dislike it right now or are fearful of Petrobras primarily because of the macro caused by the political uncertainty. The fact of the matter is, Petrobras is the least expensive super major you can buy right now. However, Petrobras, based on its stock price, might become even cheaper. So the fact that it's the cheapest super major you can buy means nothing in the greater scheme of things, especially if you're in it for the short term. If you're day trading, then that's a tough one. But if you buy it and perhaps hold it long and see how it performs, at least for the first term of Lula's career, hey, you know what? It might be okay. If you don't need the money, don't sell. And don't just sell at a loss. If you do want to sell some at a loss, do some tax harvesting or something just to rebalance and be smart about how you trade. So guys, that's my overview of Petrobras for this Friday morning. Take care, trade carefully. Let me know what you think. I look forward to your comments. Bye-bye.